Kentucky Farm Bureau believes that our tax policy should be based on sound economic principles and public need, and we believe those taxes should be distributed equitably among citizens. We're also strong advocates for House Bill 44, which caps growth of tax revenue at 4% plus new growth. We're also strongly opposed to any attempt to freeze property taxes, property tax rates. And we're also strong supporters of the sales tax exemptions for agriculture products. As you all are aware, farmers buy at retail, sell at wholesale, and so we think these exemptions are critical. So, Farm Bureau policy states that we recommend that local officials' authority to increase revenue from property taxes be confined to 4% plus new growth. Another part of our policy states that we strongly oppose freezing the state real property tax rate. And finally, a third policy it says we recommend that all farm production items, including veterinary medicine, electricity, LP gas, and natural gas, be exempt from sales tax and use tax. So I have two questions for you. With regard to property taxes, will you support the full intent of House Bill 44? And secondly, under your administration, will our sales tax exemptions for agriculture be safe?
Okay, Mr. Conway, you're first.
Yes and yes. And now let me elaborate. I do support the full intent of House Bill 44. Matt, House Bill 44 is something that was passed 36 years ago. We basically said in the state that, look, we're not going to let property tax revenues as a whole rise more than 4%. And if they do, then the voters get an opportunity to vote on it. And what that does is at the local level, it insulates folks like you, Pat, from the vagaries of a local property tax assessment. And so I do support that because you need some certainty going forward about what your property taxes are. When you're dealing with people in the agricultural industry, you're dealing with people that are obviously very worried about taxes and have a lot of land. And so yes, I support the full intent of House Bill 44. It will be preserved in a Conway administration. So the answer to that is yes. The answer to your second question is yes as well. As you said, you buy at retail and sell at wholesale. Folks, all told, the agricultural community, in terms of breaks from sales taxes and property taxes and others, Frankfurt Awards or forgives about $350 million a year. They're called tax expenditures. That's what they are. They're characterized as tax expenditures. He has encouraged you to go read his Bevan Blueprint. Go read the Bevan Blueprint. He says he's for getting rid of all tax expenditures. That's what he said.
No, I don't.
That's what he has said. Well, you have an opportunity to refute me in a second, Matt. But every time we go in front of one of these groups, I didn't mean you all, but this blueprint says he's for getting rid of all tax expenditures. Folks, that's your property tax break on agriculture use, sales tax on seeds, fencing, livestock, all that sort of stuff. We know how important the agricultural community is to the food security of this state. All right, and so look, yes, I will support House Bill 44. I will support the tax exemptions that you get in running your agriculture and your farms and your businesses. And most importantly, I want to leave you with one final point. There's going to be a lot of talk about fiscal responsibility in this campaign. I've been your Attorney General for 7.5 years. I have cut my office's budget by about 40%. 40%. And I think it's 10 separate rebalancing measures. We've done that. We've done more with less. Despite cutting our office's budget by 40%, we have civil collections up over 600%. We saved the tobacco payment. We returned hundreds of millions of dollars to the Medicaid department that was fraudulently collected. In fact, folks, for every dollar the General Assembly gave us, we returned nearly $4 to the state treasury. Please go look. We have radically changed the way the Office of the Attorney General does business. Folks, that's a record of fiscal responsibility, and that's one that I'll continue as your next governor.
The answer again is yes and yes on both of those. It's important, though, to understand something. Again, I'm reminded Groucho Marx once asked, who are you going to believe, me or your own eyes? And I feel in some measures that's what I'm dealing with as I listen to my alter ego over here telling you what I say when it's not actually the case. Take a look at the blueprint for Better Kentucky. It doesn't say that I'm opposed to all tax expenditures at all. It says that we have over 300 of them and that we spend $10 billion a year as a state, in essence, in terms of opportunity cost associated with those. And what I've said very clearly is we need to look very closely at them. They include things like mortgage exemptions. There's many of them that frankly make good sense, including those that we're talking about in this exact instance. But there are many that don't. And we need to be smart about it because guess what? In case we haven't been paying attention, and I know for a fact you all do because every single day it's a part of your lives and those of your clients. We're broke. We are the 6th least solvent state in America. We have the 2nd worst credit rating of any state in America. You talk about fiscal management, sir. These are exactly the reasons why I'm running for governor. I have worked in the private sector my entire life. This is what I do. I make payroll. I employ people. I balance budgets, not with your money, but with capital that I've been able to save and invest and redeploy. I know about this firsthand. We do need fiscal management, sound fiscal management. It's always easy to spend other people's money. As Margaret Thatcher duly noted, works great till you run out of it. I mean, that's the truth. And with respect to public-private partnerships, don't kid yourself. The private part wants what? A profit. And I don't begrudge them for that. I'm not saying I'm opposed to all public partnerships, P3s, but specifically to certain projects where the recourse comes back on the individual, like infrastructure projects, like bridges and things. It is critical that we be mindful of the fact of who's going to ultimately pay for that. When these things were initially written, they were written in a way where there was an assumption that there'd be a return on the investment. But guess what? People figure out how to avoid paying taxes. And so guess what's happened? Now more of these are being written so that there's recourse that comes back on the individuals. We as a state cannot afford to be further taxed, which gets to the heart of your question. Specifically, I appreciate the tutorial on a piece of legislation that was passed when you were 6 years old, but I understand House Bill 44, and I'm certainly a proponent of it and the maintaining of it. The part you didn't mention is the fact that you also here at the Farm Bureau say that to the extent that it would ever change, it would be at the voter bequest, and I agree with that completely, because guess what? Voters aren't going to go for it. So I'm fully in agreement with you on that. And with respect to being sensitive to where, in fact, we do tax people and how we tax people, I'm a small business guy. I own all or part of 10 different businesses. I employ dozens and dozens of people. I make payroll on many fronts. I have people without a GED. I have people with PhDs. I understand the impact of taxes on individuals, and I will do everything in my power to minimize those to the absolute degree possible.